Welcome to Lease Talk Africa, powered by Velocity Global Leasing, where leasing knowledge meets African opportunity. I am your host, Dr. Rosalind Maura, and today's episode is our 5th episode, and we are looking at things from a banker's perspective. The question we are asking today, does leasing compete with hire purchase? And could this be the myth that is costing African banks a market they have already earned? This week, a banker called me and they asked me a question that I would want to answer publicly, because if one bank is asking it, it's more than likely that every bank on this continent is probably thinking about it. And the question was this: Doc, if we embrace equipment leasing, will it not compete with our hire purchase department? And I sat with that question for a moment, not because I did not know the answer, but because I realized this question could actually be the reason Africa's leasing market is still at a fraction of what it could be. And today we are going to fix that. See, the most expensive myths are the ones that live inside institutions. They do not just cost money, but they cost entire markets. The fear of cannibalizing something that is already working in a bank, it's real. I understand the instinct behind that question completely. Look, you've already built something strong. Your hire purchase book is performing. Your team knows the product. It knows the credit assessment, knows and understands the client journey. And the last thing any smart banker wants to do is launch a new product that eats into a revenue line that is already healthy. That is not timidity. That is good stewardship. But here is what I want to say gently and directly. The fear of cannibalization in this case is based on a misunderstanding, not of banking, but of leasing. And that misunderstanding is costing your institution a market it has already earned the right to serve. Don't get me wrong. The fear is not irrational. It is just aimed at the wrong target. So let us look at leasing as an expansion tool and not competition. Hire purchase and equipment leasing are not the same products wearing different clothes. They are fundamentally different financial instruments serving fundamentally different client needs. Understanding that difference is not just important for structuring deals. It is the difference between a bank that serves 40% of the market and a bank that serves 80% of it. Let me show you exactly what I mean. A bank that offers both hire purchase and equipment leasing does not cannibalize itself. It doubles its addressable market. By the time we finish today with this podcast, you will understand the difference between these two products so clearly that you will be able to explain it to your board, your credit committee, and your clients in plain language. And you will see, and I hope as clearly as I do, that leasing is not a threat to your hire purchase department. It is the partner your hire purchase department has been waiting for. So let us look at the facts. The fundamental difference between a hire purchase and equipment leasing side by side. So you have hire purchase to your left and equipment leasing to your right. So let us look at the first dimension. Ownership. When it comes to hire purchase, a client intends to own the asset at the end of term. The ownership is very clearly determined. When it comes to equipment leasing, a client intends to use the asset. Ownership is optional. They can choose to buy that asset at the end of term, they can choose to extend the lease, or they can just choose to return the asset. They have options. The balance sheet dimension. When it comes to hire purchase, asset and liability on a client's balance sheet is recognized from day one. When it comes to equipment leasing, IFRS 16, the right of use of the asset and lease liability, it now becomes a different treatment when it comes to leasing. The end of term dimension, as mentioned earlier, the asset belongs to a client after final payment in the case of a hire purchase. When it comes to equipment leasing, the client can return, purchase at residual value, or extend the lease. When it comes to the maintenance dimension, on the hire purchase, The client bears full maintenance responsibility. When it comes to equipment leasing, the maintenance can be structured into the lease where the lessor retains some liability. And who is the ideal client here? When it comes to hire purchase, a client who wants ownership and can provide collateral is definitely a hire purchase class client. When it comes to leasing, the client who wants performance, flexibility, and capital preservation becomes an equipment leasing customer. By flexibility means they can upgrade the asset anytime during their contract, they can return the asset anytime, and their primary goal is to preserve capital. When it comes to the credit profile dimension, a strong balance sheet plus collateral is the key metric for a hire purchase. While cash flow focused and asset is the primary security, that is the metric for an equipment leasing transaction. And lastly, and I really want to emphasize on this, bank revenue. On a hire purchase, the bank will earn interest income on the hire purchase loan plus the fee income, the appraisal fee here. While on an equipment leasing transaction, the bank will earn rental income plus residual value margins and a fee income. When you look at the last item, that is the bank revenue, hire purchase generates interest income and fee income, while equipment leasing generates rental income, residual value margin, and fee income. These are different revenue streams, different P&L lines. Serving a leasing client does not reduce your hire purchase book. It opens a completely new book alongside it. So who is this equipment leasing customer that the hire purchase cannot reach? And the market is waiting for the bank to realize this customer. This is the SME owner who cannot provide collateral but has strong demonstrable cash flow, where an HP would decline them and a leasing would serve them properly. This is the business whose model requires equipment flexibility. Their technology upgrades, seasonal use, project-based deployment, hire purchase locks them in, leasing liberates them. This is the CFO who is managing IFRS 16 compliance, who needs specific balance sheet treatment, while HP gives them only one outcome, while leasing gives them a choice. This is also a company where at its growth stage cannot afford to tie capital in owned assets, where HP demands that, but leasing preserves it. So guys, every single client I just described is a client your hire purchase team is currently turning away, not because they are bad clients, because they need a different product. Equipment leasing is the product that catches them. And when you catch them at the leasing stage, you build a relationship that often converts to hire purchase, to working capital facilities, to treasury services as they grow, not the end of the relationship. It is frequently the beginning. So what does this mean for your institution or for the bank? A wider credit net. Leasing's asset-backed, cash flow-focused credit model reaches clients that hire purchase cannot. New revenue streams. Rental income plus residual value margins are additions, not substitutions. 3. Portfolio diversification. Lease receivables have different risk profiles from hire purchase. They strengthen, they do not duplicate your book. Regulatory alignment. Number 4. IFRS 16 has made leasing literacy a board-level requirement for your corporate clients. The bank that educates them wins their loyalty. And of course, lastly, the first mover advantage. In Kenya and Africa at large right now, the bank that will build a credible leasing capability before its competitors will own that client relationship for life. Here's the question I want to leave with every banker listening today. The clients who need leasing are already in your market. They're already in your portfolios. They're already knocking on doors. The question is not whether they will find leasing. They will. The question is whether they will find it at your institution or at a leasing company that will then own their relationship for the next 10 years or life, while you sit back and watch from the hire purchase desk. This myth that adding leasing will compete with the hire purchase department and cannibalize our revenue is not true. Leasing reaches clients hire purchase cannot serve. It opens a new revenue stream, a new credit market, and a new client relationship pipeline, all additions to your existing hire purchase book. I would like to go back and remind you this. The fact that that question is lingering out there, whether hire purchase and leasing compete, it tells me something important about the banks that are asking this question. It tells me they are thinking seriously. They are not dismissing leasing. They are trying to understand it well enough to make a responsible decision. That is not a barrier. That is a beginning. And that is exactly the kind of institution that Velocity Global Leasing and Leasestock Africa were built to serve. If you are in banking or asset finance, and this conversation has opened a question in your mind, I want to hear from you. Because the knowledge gap in this industry is not a problem we cannot solve. We will solve it by sitting down together and building something. Africa's banking sector does not need to choose between hire purchase and leasing. It needs both, and the institutions that understand that first will own the market. I'm inviting you to the upcoming Profitable Equipment Leasing Masterclass that's running from May 15th to Tuesday, May 19th. In this session, I dedicate an entire session to exactly answer this question for banking professionals: the credit model, the revenue structure, the IFRS 16 implications, the client segmentation strategy, everything a banker needs to walk into their next asset finance committee and make the case for leasing with full confidence. The investment is $97 only, and the registration link is in the show notes. I would love to see your institution represented at the table. And if this episode connected with you, share it with one person who believes Africa needs more leasing and more hire purchase, and the two do not compete. And until next time, remember this: hire purchase builds the foundation. Leasing builds the floor above it. And the head of asset finance who understands this will not just lead a department, they will lead a market. Thank you for your time today. Take care and see you next time. Thank you and bye-bye.